Guys, I'm not trying to alarm anybody, but we are in for some pain tomorrow in the short term. Why I say this is because we get the inflation data tomorrow. And exactly why I'm saying this is because the White House is holding a press briefing. It's supposed to be Jen Psaki, but you have this economist here talking about for the last almost hour now about the inflation data that we are going to get. They're making it sound like it's going to be even higher than Bloomberg's estimate at 6.9%. And if that happens, investors are going to widely price in a rate hike increase much faster, because that is the way you control inflation, is by raising rates. What happens to stocks when you raise rates? Those high growth companies that need to borrow money to keep growing get hurt the most, because it now costs more money to borrow that money. So I think we're in for some short-term pain tomorrow. I actually did make trades on this. If you guys want access to all of my trades, check that link out in the pinned comment for the buy and sell alerts. Make sure to check out the other link. Go follow me over on Twitter, and the links in the description to get totally free stock. But here in this video, we're going to go over what I think is going to happen with the overall markets, as well as my best case, base case, worst case scenario, some technical analysis, the Ortex data, the stock O tracker data, everything you guys need to know. So let's get straight into this video. Let's not waste any time. AMC is down 7% today, but AMC is not alone. And this is exactly what we want to see is, I shouldn't say we want to see AMC down 7%, but we want to see the overall markets, other stocks that are down 6, 7, 8%, not just AMC. So we know it's nothing to do with the trade. So rest assured, the trade fully intact. This is not meant to scare anybody. And if you take a look at my portfolio over here on Robinhood, had this portfolio for a very long time, really don't want to sell these stocks because I don't want to pay taxes on them right now, at least. But you can see SoFi down 7%. DraftKings down about 5%, Matterport down 7%, Lucid down 15%, Affirm down 8%, PayPal down 2.2%. Purple down 3%. You guys can see this is not just exclusive to AMC, and I think a lot of people miss that if they're fully just invested in AMC. They see AMC down 7%. They don't see that these other stocks are down so much as well. So I'm taking a massive beating, but I do think tomorrow is going to be worse, because we do get those numbers, like I said, at about 8 in the morning, 8:30 in the morning tomorrow. So by the time markets open, by the time people are starting to wake up, the markets are going to have that first initial reaction, and then that first hour of trading is going to be very, very key. And we have bounced up quite a bit, so we do have a lot of meat on the bone, whereas a lot of these stocks have not recovered since where they were at the top of the marketplace. But when you look at the charts, it looks like most stocks should have already at least mostly recovered, and that's simply not the case. So we do have a lot of room to come to the downside, and that is really what is kind of alarming in the near term, especially for the markets and with AMC stock. So that is the scoop. That is what you guys need to know. Expect a lot of volatility at the very least, if not a big down day tomorrow, because obviously tomorrow is Friday as well. So if you want to get out of some of your trades, like institutional investors are probably going to do, Friday is going to be your last day before that big important week next week, and the Fed meeting the 14th and the 15th. So let's move on to a little bit more of AMC. Let's get into the data, and then let's talk about the charts. So for the Ortex data, we are looking at about 19% short interest of free float. This is the estimate, 97.35 million shares that are sold short, and this is only proof with a 19% estimate of free float, short interest of free float, that the short interest is really well over 20%. Now the share utilization is at 77.82%, and the days to cover are going up. That means there is a lot of shares being shorted into the marketplace, as the volume is not really picking up. So they're not offsetting each other. You see the days to cover still going up, and that's exactly what we want to see. This makes it harder for shorts to get out of their short positions, and that overall is a great thing. Now we are getting the exchange reported short interest data. This just finalized right here for November 30th. Let's take a look at November 30th. Where were we at? We were at about $37 per share. The short interest is coming in at 16.26% with 83.41 million shares that are sold short. This is obviously before we did take that major downturn to the downside, but I think a lot of institutional investors are just using the option chain to make it look like and report that they have covered on their short positions, because the last thing you want is the short interest on one of the most shorted stocks, the most publicly short squeeze trade stocks, to come in over 20%. That's the last thing that you want, but you could not convince me the short interest is not over 20%. Now, let's move on to that. Let's get into the Stocko Tracker data. I actually do have to pull it up here really quick, and we do have a lot of shares that are still available to be borrowed, in between 4.7 million and 5.4 million shares. Now, as we have talked about, guys, with this low days to expiration, December 17th, any move that you do see from puts going from out of the money into the money, you're going to see a lot of shorting that has to be done almost simultaneously by the market makers. Same thing when the puts run from into the money, out of the money, and the calls run from out of the money into the money. You'll see that buying power that has to happen from the market makers almost instantaneously. But for December 17th, you're looking at 78,000 puts that are in the money. That controls about 7.8 million shares that will have to be hedged for or de-hedged for if these puts actually run out of the money by December 17th. You are also looking at calls that are in the money at 23,000, calls that are out of the money at 308,000. This expiration is not nearly as important as the January 21st, 2022, where you are looking at 120,000 calls that are in the money, 360,000 calls that are out of the money. For puts, almost 40,000 puts that are in the money, 276,000 puts that are out of the money. So very important numbers right here. Just expect a lot of volatility from the market makers as they have to hedge for both directions. Now let's take a look back. Let's start this up again and see if he is still the one talking. Yeah, you guys can see he is still talking, and this whole conversation is about inflation. So I think this is a sign of these high numbers. If we come in over 7%, the markets are going to have a taper tantrum. They're going to throw a little fit because the Fed meeting is coming up just next week. So hopefully that makes some sense, you guys. Hopefully it resonates with you at least a little bit. Now, as far as AMC is concerned, we're staying, relatively speaking, in between this range at about $32 per share and about $28 per share. We're literally right in the middle at $30.14. I really wanted to see a close above the 200-day moving average at $31.74, but due to the developments today, that is not going to happen. Now, if we do come down, this is my worst case scenario, to about $26.50 per share. That's the worst case scenario. The base case scenario, what I think is going to happen, we're going to drop down to $28, about 50 cents per share, level out around here, and then ultimately end up making that way back up after the Fed meeting next week. Best case scenario, inflation comes in lower and the market kind of eases back on the expectations that Fed Jerome Powell will announce interest rate increases or a faster tapering. If that happens, I do expect the stock to make that move above the 200-day moving average, possibly to even about $35 per share. Now let's take a look at the volume for the day, and the volume is still really, really low. So this means that even just a little bit of shorting happening with the stock today is moving it around a lot. And we're looking at 27.6 million shares that have traded hands, which is very, very small. With that days covering that is shooting through the roof, it does look incredibly bullish after these near-term fear catalysts are out of the way. So that is basically going to be all for this video. That is really what you guys need to know. Not too much else to add, because all we do know is, from technical analysis standpoint, three things that matter: the support, resistance, moving averages, as well as the volume. Those are the only three things that matter. You can dinkle with candlesticks all you want. It's not going to change anything. It won't help you predict what is going to happen next. So that is going to be all for this video. I hope you guys got some value out of it. If you did, hit that like button for me. Consider subscribing to this channel. And no, I don't wish the stock goes down. This is only what the data is telling me, and really what this press briefing is telling me, because they do not do this kind of, press briefing about inflation for an hour long. That is not something that is going to impact us, right? So definitely giving us that heads up that these numbers are going to come out very, very high. So like I said, that's going to be all for this video. Check out the pinned comment down below, link for my Twitter account, as well as the link for the buy and sell alerts. Links for free stocks down below in the description of this video as well. Take advantage of that. Love and appreciate you guys. Thank you for watching. Until next time, I will see you in the next one.